Assalamualaikum. Today we will be discussing question December 2019, question 1, part B. Please refer to my notes that I have sent through WhatsApp to follow this discussion. Okay, let me read the question first. Fabrico Berhad is a construction company with huge potential for business expansion. In 2018, the company's net income was 4.8 million and the corporate tax rate was 28%. It is also holding 6 million ringgit worth of convertible bonds at 8% interest that are convertible at par value into 200 shares of common stocks. I'm sure everybody knows what is a convertible bond. Convertible bond is a bond that gives the holder the right to convert it to common stocks. In this case, the convertible bond, each convertible bond can be converted into 200 common stocks, 200 units of common stocks. Okay, as a financial analyst, you are asked to prepare some information for the company's shareholders. Okay, so you are given the partial statement of financial position as at 31st December 2018. We have preferred stocks or preferred shares. We have a common shares or common stock at 50 cents per value. It's stated there, the authorized 20 million shares and issued 5 million shares. What does it mean? It means that your company is authorized or can issue up to 20 million shares, maximum of 20 million shares. But as of now, as of 31st December 2018, the company has issued only 5 million shares, 5 millions of common stocks. Okay, and capital contributed in excess of par is 1.8 million. What does it mean? It means that when the stocks are issued, you have to pay for each stock the price. Anything that is above the par value, let's say for example the subscription price is 2 ringgit, the par value is in this case the par value is 50 cents. So we have the excess of 1 ringgit and 50 cents. So this excess of 1 ringgit and 50 cents is recorded here, capital in excess of par. If you do not understand, that's okay, doesn't matter, because it will not affect your answer. And then we have retained earnings of 2,700,000 or 2.7 million. So retained earnings is whatever profit that we get from our previous year's business after paying the dividends. Then the balance of the net income after paying the dividends will be added into the retained earnings. Okay, so I'm quite sure these 4 items, the first 4 items, you are familiar with. So, and there is another item that is treasury stock. Okay, what is a treasury stock? Here we have 400,000 shares of treasury stocks. Okay, treasury stock, if you Google the answer, if you Google, treasury stock is a stock that are taken out from the stocks that have been issued and put aside by the management of the company for pension purposes. Okay, if you do not understand what treasury stock is, what is more important is that this 400,000 shares of treasury stocks will be deducted from the 5 million shares of outstanding shares. It means that the total outstanding shares after deducting 400,000 shares, 400,000 treasury stocks, so 5 million minus 400,000, so the total shares outstanding is 4,600,000. Okay, When you calculate the total shareholders' equity, you add up all the figures, deducting deducting the 200,000 for treasury stocks, and you get total shareholders' equity of 8.3 million or 8,300,000. Okay. And the question asks you to compute the earnings per share and book value per share for the company before the conversion of convertible bond and after the conversion of convertible bond. Okay, let me explain to you what is actually the effect of convertible bond. When a convertible bond is converted into common stock, the net effect that it will increase the number of common stocks outstanding, but the convertible bond will be no longer in existence once it is converted into a common stock. Okay. Okay. So we have basically we have 4 calculations that we need to perform. We need to calculate 4 calculations. One is earnings per share before conversion, before convertible bonds being converted into common stocks. And then we have to calculate book value per share before conversion. Okay, that's the second one. The third one is we have to calculate the earnings per share after all the convertible bonds have been converted into common stocks. And the last calculation is the book value per share after the convertible bonds have been converted into common stocks. Okay. First, you need to know what is the formula for earnings per share. Okay. Earnings per share, the formula is net income divided by number of shares outstanding. Okay. Net income divided by number of shares outstanding, we get earnings per share. The book value per share, the formula for book value per share is total shareholders' equity divided by number of shares outstanding. So you get book value per share. Okay, as I mentioned just now, we need to calculate 4 items. One is earnings per share before conversion. Second one is book value per share before conversion. The third one is earnings per share after conversion. The fourth one is book value per share after conversion. Okay, so let's take a look at this problem one by one. Okay, please refer to the answer scheme that I have written. Actually, the answer scheme given in the is already given to you, but in the you have already photostat the answer schemes, but I think you need to be explained what does each item means. Okay, so if you look at the answer scheme first page here, the first page, so this is the first page answer scheme. Yeah, this is the one. Okay, look at the first page answer scheme. Okay, first you need to write down the information so that it's easier for you to refer when you need the information. Okay, like what I did just now. First, you are given the information on net income of 4.8 million ringgit. And then we have a tax rate of 28%. And we have 6 million worth of convertible bonds at coupon rate of 8%, and conversion ratio of 200 shares. When I say conversion ratio of 200 shares, it means that each bond can be converted into sorry, not 100, 200. When I say 200 conversion ratios, it means that for each bond it can be converted into 200 shares of common stocks. Okay. Okay, first is to calculate the earnings per share. Earnings per share before conversion. So as I mentioned earlier, The earnings per share formula is net income divided by number of shares outstanding. When we say number of shares outstanding, it means that shares or common shares that can be traded, that can be bought and sold in the market. So, to get the number of shares outstanding, you need to deduct the number of shares issued. You have to deduct the treasury stocks or treasury shares, because these treasury shares, these 400,000 units of treasury shares are taken out from the market for pension purposes. So, to get the number of shares outstanding, you need to deduct 5 million shares minus 400,000. So you get a number of shares outstanding is 4,600,000. And to get the earnings per share before conversion is net income of 4.8 million minus preferred shares dividends. Okay, preferred shares dividends is given at 6%. So how do we calculate the preferred share dividend? 6% of 1.5 million or 1,500,000, because the preferred shares value is 1,500,000, and at the rate of 6% dividend, so you get 90,000. 6% of 1,500,000. Okay, that's how you get earnings per share is 4.8 million or 4,800,000. That is net income minus preferred shares dividend of 90,000 divided by number of shares outstanding, in which number of shares outstanding is, you can get it by deducting number of shares issued by treasury shares of 400,000. So you get earnings per share before conversion of 1 ringgit and 2 cents. Okay, that's the first calculation. The second calculation is to calculate the book value per share before conversion. Okay, to get the book value per share formula, you need to calculate the common equity divided by number of shares outstanding. Okay, number of shares outstanding is very straightforward. We have calculated the number of shares outstanding just like the previous formula, which is 5 million minus 400,000. So we have a number of common shares or common stocks outstanding is 4.6 million. How do we get this common equity? Okay, common equity, we get the common equity by deducting shareholders' equity minus preferred stock. So shareholders' equity is 8.3 million or 8,300,000, and preferred stock of 1.5 million. So you get a common equity before conversion or common equity before conversion of 6,800,000. So you get the book value per share of 6,800,000 divided by 4,600,000. You get a book value per share before conversion of 1 ringgit 48 cents. Okay, so we have calculated 2 out of 4 that we need to calculate. Okay, the third calculations that we need to do is to calculate the earnings per share after conversion. So what happened is, when you convert all the bonds, all the convertible bonds into common stocks, the results is that you will have more shares outstanding, because all the bonds have been converted into common stocks or common shares. So now this is the second page of our answer scheme. Yeah, look at the second page of the answer scheme. Okay, so since we have 6 million worth of convertible bonds, and each bond has a par value of 1,000. So you always assume, you always know that the par value of the bond is always 1,000 ringgit. So from there, we know that there are 6,000 bonds that have been issued, because 6 million divided by 1,000, we have 6,000 bonds. if each bond can be converted into 200 common stocks or common shares, so if all the bonds or if all the 6,000 bonds are to be converted into common shares, we have 6,000 multiplied by 200, we have 1,200,000 shares. Okay, to get the number of shares outstanding after conversion, you need to add the common shares that are already in your hand, that is 4,600,000, plus the new shares of 1,200,000 that exist as a result of the conversion of convertible bond from convertible bond to cash. So we have a common shares of 5,800,000, 4,600,000 that are already in our hand, plus 1,200,000 that are new shares after the conversion of the convertible bond. So now, okay, this is a tricky part. So you have to listen to me carefully. Once the bonds have been fully converted into common shares, you no longer have to pay interest on that particular bond. So if you are familiar with the income statement of any company, by not paying interest on bonds, you can save that interest, and that interest will be added back to your net profit. That's why we add back the interest interest that we save after bonds have been converted into cash. After bonds have been converted into common stocks, we save 345,600 ringgit after tax. So this 345,600 ringgit after tax savings, why do we call it tax savings? Because after the bonds have been converted into common stocks, you no longer have to pay interest on that bonds. So that is the money that you save by not paying the interest. That's why we add back this 345,600 ringgit to the net income, the previous net income, 4,710,000. Yeah, that's so the total, the net income, the new net income is 5,055,600. And to calculate the earnings per share after conversion, we do the same thing. Net income divided by number of common shares outstanding. By now, our net income have risen from 4,710,000. We add back 345,600. Why we add back? Because of this savings on interest. We no longer have to pay interest on bonds because all the bonds have been converted into cash. All bonds have been converted into common stock. So now the effect is our net income has increased. So does our common stocks. So do our common stocks. Common stock have also increased to 5,800,000. So now we have both figures have changed, net income figures and common shares outstanding figures. So to get the earnings per share, net income divided by number of shares, you get 87 cents. Net income is 5,055,600 divided by number of shares of 5,800,000, you get 87 cents. Okay, and the last calculations is to calculate the book value per share. Remember, the book value per share is calculated by dividing common equity, the value of common equity divided by number of common shares after conversion. Okay, now the common equity has increased. Why has increased? Because when you convert bonds to become a common stock, so bond is a debt. So once you convert bonds into equity, so now you have additional equity of worth 6 million. So 6 million is no longer debt, but it is now an equity. Understand? Because bond is no longer in existence. Why? Because all the bonds have been converted into common stock. So now the 6 million is an equity, it's not a bond, it's not a debt or bond. So now your equity has increased from the originally from 6,800,000. Now it becomes 6,800,000 plus 6 million, you get 12,800,000. So to get the book value per share after all the bonds have been converted into cash, you get a common equity of 12,800,000 divided by number of common shares after conversion. So number of common shares after conversion is 5,800,000. Now you get a book value per share of 221. So now you have calculated all these four ratios that the question asks you to calculate. Okay, until we meet again, bye, and say hi to my students. Bye bye.